Welcome, my friends, to another investment portfolio. The REIT. The REIT is a real estate investment trust. This is a great companion to your portfolios for diversification into the real estate market. So let's understand what a REIT can do for you. It is a real estate investment trust, so we own or own finances and income generating real estate. So we're buying different types of property in a REIT. It includes sectors like residential, commercial, retail, industrial parks, apartments, all sorts of great things. And the newest venture in REITs are data centers. So they were created, the REIT, in 1960 to help the real estate investment market, give everybody a shot to try to get into it. As we look at a REIT, why would we want to invest? Well, here's a very interesting reason. By law, a REIT must pay out 90% of its taxable income. So if it makes a profit, all right, now we're going to tax that, 90% must come out as dividends. So it could be a really nice, consistent way to earn income from your portfolios. Now, you can take that income in either cash, it's paid out to you, or you can ask all of those dividends to be reinvested, which will buy more stock in the REIT. So the real estate investment trust are bought and sold as shares of stock. Nice. It certainly offers the long-term potential for capital appreciation. There's one thing great about real estate. There's many things great, but man, does it appreciate. It will appreciate year after year, obviously. The 3 L's of real estate are location, location, and location. So good locations, real estate appreciates in value, long-term capital gains right in there. The nice thing about a REIT, my friends, is you can jump in and jump out very quickly because they are bought and sold just like stocks are. Nice. So why would we want to add this to one of our portfolios? If we're looking at stocks, we're looking at mutual funds, we're looking at exchange traded funds. Now here comes the REIT. It's a different type of diversification. Real estate will behave differently than stocks and bonds will. Real estate, again, usually has a long capital appreciation. It is a real investment. The REITs actually buy land, and they buy buildings, and they buy data centers. So it's going right into a tangible asset. And of course, that can help reduce the portfolio risk volatility. If the stock market doesn't do well, if things aren't going well, usually real estate's like a hedge, and it takes up the slack right in there. And it's a great hedge against inflation. So if the inflation rate, don't believe the Federal Reserve of whatever numbers they put out, because those numbers are not real to you and I. Those are in the macro world. We live in a micro world where we pay for gas, for housing, for food, for taxes, for clothing, for the stuff that we do. That has gone up quite a bit. In that world, the inflation rate is easily 5 to 10% per year. Real estate will always go much higher than that. It can appreciate at 10 to 20% per year. Here we are in the DFW area. You go back 5-6 years, real estate has appreciated 40 to 50%. Nice, nice. And what is great about a REIT is you can purchase it on your Robinhood account, on your Fidelity accounts, on your Yahoo Finance, what I've told you to get, your M1 account, or your Google, any one of those, Google Finance. You can buy REITs anytime. Get up in the morning, take a lunch break. I think I'll buy a couple of shares. I just did that while I was making this assignment. I saw a REIT that I liked. Minimal amount of money. Bought at least 1.5 shares. That's how great these are. You could not do that in the world of real estate. Real estate in itself, by buying actual land, which can be a great part of your portfolio, and if that is your role, it is your money, and you do exactly what you want to with it. But if I did try to buy rental properties, Now I've got to be qualified for loans. I have to have appraisals. I have to have a big down payment. I mean, there's a lot that goes into that. And when I go to sell that actual real estate, same thing happens in the reverse. Appraisals, funding, it probably takes 30 to 60 days to get that money back out. And again, it's not a bad thing, it's just a different thing. The nice thing about REITs is you can trade all day long, buy and sell. Pretty cool. So, what our assignment is going to be is to look at different sectors. It's not of the economy, just like we're trying to do in our other portfolios. Every investment has risk. One way to limit the risk and to reduce some of it is to diversify your investment portfolio. So in a REIT, you could buy a residential, which would consist of rental homes and apartments. There's a lot of companies that do that. You may still think the malls and shopping centers have value in the online world that we live in. If you do, then you can get into REITs that own shares of companies like Melvin Simon. Right? They're the biggest mall operator in the United States. Again, owning those real assets. Maybe you like industrial. In the online world, in the fulfillment world that we live in, we need a lot of warehouses and logistical centers. So to have that product there and that can be shipped out very easily, so you get into that. Healthcare, hospitals, medical buildings, nursing homes, those are not cheap, nor are they free. And that could be some very interesting ways to gain a lot of appreciation and value and of course, a good income stream. And finally, not finally, but also data centers. There's a big problem in the AI world for the next 5+ years. You cannot generate the AI that we think we can without a massive digital infrastructure. So that's going to consist of energy, it's going to consist of quantum computing, it's going to consist of big data centers that can drive that. And so you can buy into REITs that are now just focusing on data centers for AI, for Bitcoin, for all sorts of digital needs. Nice. All right, so in our portfolio sample, you have $5,000 investment, and I want you to diversify that across 5 REITs in different sectors, just like we looked at. Maybe a data center, maybe healthcare, all right, maybe residential, commercial, warehousing, up to your own creativity, but let's try to find 5 different ones. Now you could put 1,000 into each one, that would be 5,000. You could put 3,000 into one and then divide the rest of the 2,000 up into the other 4. It is your choice. Trying to do this, trying to analyze trends, dividend income, and balance some generation income with growth potential as well. So that's going to be our assignment. It's a nice way, my friends, to get into real estate investing without actually owning real estate, going out and buying pieces of property. Good for long-term investors, could be a great piece on a very long investing track. I think you'll like that. Always, we have to do the due diligence. We're going to research the performance and risk, and let's start building a portfolio. Now, as in all the portfolios, I am happy for you to utilize AI. All right, artificial intelligence programs can be great. I did for this one as well. But what I see too many students doing is copying and pasting directly into this, trying to have chat or Copilot do all the work for you. If that's the best you can do, then there's no need for you in the workforce. You've got to be able to use AI, synthesize the data, go through it, check it, make sure it's correct, and then create your portfolio, create your reporting. AI right now, again, because it doesn't have the power it needs, will try to find the quickest solution it can, especially if you're using free services. So it will find data that's old because it's out there, it's researched it a million times, and it can find it quickly. Doubtful the pricing is right. One thing in the financial world, when you do your financial research, you've got to go make sure those prices are right on Robinhood, on Yahoo Finance, on Fidelity, whatever you're using. So use AI, let it narrow down, and then you need to make some of the decisions, and then you can bounce those back, but you want to make sure you're using the most up-to-date information. And check that AI out. So use it, but don't rely on it. Be able to utilize it. Those who can utilize it can create a very good career. So let's look at the nuts and bolts of this assignment. So here is the actual assignment that we have on our Canvas page. Here's our objective. We're watching the video. Here is your template. I have created, as always, the templates for you. Go ahead and download the template. Boom, you've got that. Here's what we're looking at. We're going to define what a REIT is. 1-2 paragraphs. We're going to make our selections and identify at least 6 publicly traded REITs. Then we are going to allocate our investment among 5 of them and answer those questions after that, the reflection questions. You can use all of these tools that you're going to need. Yahoo, Robinhood, ETF.com, REIT.com, Fidelity, Chat, perfectly fine. Gemini, whatever resource you need to use, and then you're going to submit your project. As always, you will submit exactly back the PDF that I have given you. You will not put a graphic file. Those will not receive credit. There we are. And of course, we're not going to email this. All right, so that's what it looks like. When you come in and you've downloaded the actual portfolio PDF, the template, it's going to look like this. There's your first question. Now you're going to find yourself 1, 2, 3, 4, 5, 6 REITs, their ticker symbol, the sector they are from, their price, their dividend yield, their 5-year return. If applicable, hopefully they have at least a 5-year return. Some may be a little bit newer. And their market capitalization. That is how much is the company worth. Then you're going to allocate that $5,000 investment against 1, 2, 3, 4, 5. Again, you can pull right into here, my friends. So let's look at what I have done. There we are. A little bit of a couple I have found. Where did I go? Well, first I went to Copilot. Then I said, Copilot, I need 7 REITs under $50 a share, because that makes it much more investable for most of us. And against different areas: retail, residential, healthcare, industrial, data centers, office. And here is what we found. Makes it easier. These are some interesting ones. Now, this is going to be your ticker, always in parentheses. This is the actual name. So equity real estate, residential, that is their ticker. Now that says the price is around 49. I need to always recheck these numbers. There's a retail, there's a healthcare, there's industrial, there's data centers, and there's office. It gives us a great idea. You can now, with that information, go right to a Yahoo Finance, and you can find some of the ones that you want to look. Now, this is called Realty Income Corporation. They just have a O as their ticker. So all the information I want in here, actually it gives me my market capitalization right now. Intraday, that's perfectly fine. Basically round up, $54 billion. Here's their earnings data. There is their dividend. It's a 3.21, their dividend in yield. So the dividend actual percentage is 5.3%. Great. There's some ranges. Again, as you did your stock portfolio, you can find lots of great statistics and data on these companies right in here. Also, you could use your Robinhood account. So that was a Realty REIT. This is a data center, Crown Castle, a little bit more expensive, $96 per share. Crown Castle, about it engages in the business of owning, operating, and leasing communication infrastructure. All right, these are going to be data centers. gives us a lot of information that we needed. So I'm going to take CCI, which I did, Crown Castle, ticker, data center, price, right about that $95 range, 93 to 96. Their dividend yield is 5.49. Their 5-year return, again, I have to go back into two different forms here. I go back to Yahoo Finance as well as my Robinhood account, and it will tell me to get the 5-year average on it. And of course, I could always do a little AI on that, but I would really have to go back and look at the actual data in our Yahoo Finance. Going back to it, $42 billion, 28% return for Crown Castle. Omega Healthcare, OHI Healthcare Facilities, their price is $42 per share to get into that real estate investment trust. There's your dividend yield. There is 98% return in 5 years. Nice, $13 billion. So I would now go populate that down to 7 that I would look for, or the 6, excuse me. Now I'm going to simulate the investment. So as I go here, Crown Castle, put in a lot of the same information. I'll put 1,000 into each. So 1,000, basically by their shares, I get about 10.5 shares of Crown Castle based on their $42. Again, the stock price divided by the amount that you invest in gives you the shares. I put the yields on here. So what is my annual income that I could get from these companies? Well, super simple, my friends. 5.49% times $1,000, that's my investment. I get $54.90 a year from that REIT, and I get $63 from my Omega Healthcare. Again, we're starting off with 1,000. This could go to 10,000. Now we get $590 a year. Could go to 100,000, and now we're at $5,000 a year extra. So you start this young. Right now, I would just say all my income, I want it reinvested so I can get more. So there's the nutshell right there, my friends. Find 6, pick 5, and now tell me why you liked it. Tell me what are some of the benefits and drawbacks. Do you want cash dividend, or do you want to reinvest it back in the REIT? And again, every time I ask a question, you give me the answer and the reasoning behind it. What do you believe has the most potential of all the REITs that you just did? What do you think is going to have the most potential over the next 5 to 10 years? That is our assignments in a nutshell. So what have we utilized? We've utilized the best of multiple worlds. We've utilized AI, and we've utilized your Robinhood or your Yahoo Finance. You're going to use both because you get so much great information verifying the numbers are correct. And now you have created a nice portfolio. So as our final step, you have everything completed. You want to now submit it. Again, you're submitting it in the actual PDF. Make sure you put your name on that PDF that we had. REIT portfolio assignments, again, put your name right in here, and when you are ready, you simply open it, and then you click submit assignment, and you'll have everything done. There is the grading rubric. 5 points for your definition, 15 points for the full 6 REITs. Your portfolio allocation, good numbering, making sure everything works right. I do go back and I check those prices, my friends. So make sure you have the right price as close as it possibly is. I know it's going to waver a few dollars, but it needs to be very close. And then reflection and insight, nice. There we are, submit assignment. I'm not going to do that because it messes up. It acts like somebody has submitted it, and it's very difficult for me to do any editing after that. There you are, another portfolio. My goodness, you learning this stuff in government or history classes or math or any English, anything else? No, I didn't think so. We are now on our way to building great generational wealth For the few students who are going to utilize the information that I have said in this class, and I don't mean that as a condescending mark, my friends, only few people do it. That's why so many people are in financial disaster right now. You are really going to change the trajectory for yourself and for your family. Hope you enjoy this project.